to homeownership. I like to at least introduce everybody that's part of our team. There's actually a lot of different people part of our team: underwriters, underwriting managers, people that we suck up to every day. Whenever we go to the corporate office of Highlands Residential Mortgage, it's located in Allen, Texas. And whenever I go there, I come with gifts. Yeah. I always say I come with Starbucks, chocolate, or adult beverage. So because we want to take care of the people that give us good advice and take care of us. And so keys to homeownership: real estate can't be lost or stolen, nor can it be carried away. Purchased with common sense, paid for in full, and managed with reasonable care. It is about the safest investment in the world, spoken by Franklin D. Roosevelt. And on our team, we have a loan assistant, Tanya. She's not on the call. She's actually working on a loan at this moment. And she goes to the corporate office in Allen. I'm actually sitting in Flower Mound. And then Philip Price is in Lovekin, Texas. Whoop, whoop, the East Texas, Stephen F. Austin. You know, what's that sign that you make? What's the, yeah, there you go. It's yeah. Yeah, there you go. And then Ben Sinclair, he is in the Houston area today. And so we'll just kind of go through a couple of things. And I mentioned Karita. And if people admit, a lot of times people will admit late, and as they, if I don't guess y'all can see the admittance. So if they do, I'll check it. And if they pop in, then I will admit them into I want to make sure there's not any. So I'll just admit them as we go. The biggest thing is about the keys to homeownership is that I think that people don't know the process. I think a lot of times people say, I want to do a mortgage, but I don't know, what I'm supposed to do first, and I think a lot of times we when we're in the business, we say things that we think people know what we mean, like DTI or LTV, and people don't always know what those terms mean. And I love this slide that I have here. It just kind of says, okay, let's start. What kind of budget? What are you paying for rent right now? What do you see that you might be comfortable with as a mortgage payment? How do you prioritize what you want and what you need? And I'm telling you, that is a tough deal, right? What do I want? What do I need? Understand the market. And around here, understanding the market, I think, Martha, you would say that understanding the market is challenging. Decide on the location. I know I do a lot of pre-qualifications every day, and I'm like, where do you want to live? I don't know. Well, that's tough, right? Well, do you want to be close to your kid's school? Do you want to be close to where you work? Do you have to go into work? Are you a remote worker? Deciding on a location, narrowing it down so that you know where to look, and getting a pre-approved for a loan, then finding a great real estate agent, and then let's take it over the finish line. It is equal parts insurance, title companies. It just requires all of us. It's a recipe to get it over the finish line and make things work correctly for everybody. And I always just talk a little bit about our team. We are licensed Texas, Oklahoma, Arkansas, Florida, and Philip is licensed in Louisiana. We're an award-winning group, and we come from long backgrounds. I would like to say that I started when I was 12, but I've been here a minute. We've all been, Philip too. Philip has a background in appraisals, and Ben has a background in underwriting before he became a loan officer. And then Philip, same thing. And he's worked for banks, and, we've just had different backgrounds. We like seasoned home buyers, first-time home buyers. Karina and I just closed recently on a loan that's a repeat customer. And she started off with, a modest home. It was a great home. It's still a great home in Aubrey, and modest home. And now she really bought her dream home in Allen, right? Was it Allen? No, McKinney. I think it's McKinney. Plano. But near her office. So it was a driving thing, but she, got a pool, all that kind of stuff. So we work with a lot of different people in a lot of different ways. And now we get to see Martha. How lovely. Hi, Martha. The 8 steps to the mortgage process. What are the 8 steps to the mortgage process? Well, the 8 steps are pre-application. So what happens on our team is that we will review a loan application, and we will do what's called a soft credit pull. I'll kind of give a slide on that in a little bit, but we'll review some documents. We'll go over some of the soft credit pull so that we can get a window into the soul of what the situation is. We confirm a loan program. Once you're under contract, that may or may not be the right moment to lock an interest rate, depending on what the close date is. You want to find a home when you're in the pre-qualification stage or pre-approval stage. We process the loan. That's kind of how we bake the cake. Order appraisal, order title work. We're going to make sure that we double verify employment. This is always the part where Philip says, don't quit your job. Like, because we've had that experience where people have, done that. They've quit their job, and, that's not good. So, is that Martha, do you have a cat? Is that a cat? Oh, it's a bird. Oh my gosh. That's the first bird on any home buyers class ever. That's so great. It's a bird. I was like, what? There's something, I didn't know if you knew something was crawling on you.
I know.
So, okay.
I have parrots. Okay.
Oh, nice. I love it. Processing, underwriting. Underwriting evaluates the documentation. So here's the thing. Once I've reviewed the file, Ben's reviewed a file, Philip's reviewed a file, we pre-underwrite our loans. So what the underwriter is doing is verifying the documentation that we already knew, or we wouldn't have given you a letter. And that's really, really important so that we don't have any snafus. And then we satisfy the underwriting conditions, we get to closing, and then post-closing, right after the customer is signed, is we, make sure we shore up the funding, the wire, that information. Like I just mentioned, Karita had a closing a couple of Fridays ago, and from the time she stroked the first pen to funding of that loan was 38 minutes. So we know what to do, and we just try to do it, and we do it with as efficiency as we can. We do hybrid closings now. So hybrid means the customer will sign some documents, e-sign documents in the morning, and when they go to the closing of the title company, it's a much smaller package, and the amount of time from start to finish we speed that up. High touch means high tech. We use an app, and that helps people. They can do their own calculations. They get their own portal. They can upload documents through that portal. We partner, and like Karita, for example, I always know when she's working on the weekends because she shared my app, and then a customer can then take that app and then they can do a loan application. And I always know when she shares the app, typically less than 10 minutes, she's texting me going, you might get an application from Joe so-and-so or whatever. And so, or she's big at getting, she networks a lot within her church. And so she will have shared an app. And it's such a great technology piece because it does allow in the touch of the palm of someone's hand to be able to just think about it, think about the calculations and, how it works. And we call it a digital mortgage. You apply online or on your phone. You can run some cost analysis, and we provide you with some calculators. We run loan status updates, and then it's also a secure way to submit documentation. It's a secured encrypted portal with a username and password, and that is just a pretty efficient way for us to be able to review documents. On the loan officer side, it tells us when someone has uploaded documents. We hear it a lot about home values and about, oh, well, I missed my window of opportunity, that I should wait, I've missed my window. And I love this slide because change in home value after 10 years, purchasing a home and holding it for 10 years resulted in a profit every year except one since 1942. Now, let's just let that land for just a second. And just put that into perspective. So in the only time, like in 2006, there you can see a 3% variance there. But if you have kept it for 10 years, it's resulted a profit in every year except one since 1942. So how amazing is that? So it's great to be in Texas. This is where people want to be. And it's also, equally great that properties, increase in value over the course of time, and in the area of where we're at. I always love this. Why do we need a realtor? You guys know the answer to that, but they find the perfect home. They have market knowledge. You cannot go, I use YouTube as the example, right? You can go on YouTube now and learn just about anything. Ben has great fishing skills, and you can go on YouTube and learn how to, create a spin rod and put the right bait on it. But unless you really have knowledge of that, and we've tried it, unless you really have knowledge of a particular lake or body of water, it's going to be more challenging for that person to be able to be successful in catching fish, and it's the same thing with real estate. I provided some pictures here, up in the top right, a gentleman named Norman, he came to me, and Ben was at that closing that day, and Norman had been declined, and he also had just wasn't sure. He'd had some bumps in the road and needed some advice and some guidance. Philip there, I swear Philip has more great pictures with kids in it, kids and dogs all the time. And then at the bottom there, I helped a veteran, Mr. Egger there, and Sherry Adams, and I just happened to be outside when he just fell into the arms of his real estate agent, because she held his hand, and Sherry was just awesome through that process. And it was that closing, gosh, it seems like a lifetime ago, but it was like in the beginning, it was like around February, the beginning of February. And I think it was my first VA loan of the year. And I just loved it. And that's kind of why we have real estate agents. They stay objective. They explain each part of the contract. And especially today, you can get on YouTube and learn what to do, but you wouldn't do that if you were like, getting a heart surgery or anything like that. And that's the same thing with what real estate agents do. We need their help. They communicate to the sellers. Why do we buy? Affordability. You're able to purchase for what you pay in monthly rent a lot of times. Investment versus expense, fixed payments, tax advantages. You're able to deduct the interest on your loan and your property taxes. And then the freedom to make your home what you want it to be, and upgrade and suit your lifestyle. We talk about those things all the time. Your principal and interest, when you have a fixed loan, that doesn't change. And we've certainly talked to a lot of people where their rent just seems to keep going up and up and up, and it changes with very little notice. And this is just a buy versus rent comparison. It's over the course of 9 years. I use Denton, Texas as the example, and it just talks about the net gain buying a home. And obviously in the first couple of years of any purchase, you're paying a lot of the interest, is you're paying into that. And you start getting into the principal, and then you have an amortized gain over time. And then again, this over the 9th year in this example, you've got a 9-year gain of $120,000. And our market has been phenomenal in that regard. And it just kind of gives you a cash flow difference, the purchase, difference, and the tax benefit over renting. So the tax benefit over renting is $17,000, almost $18,000. And I was on the phone recently with someone. I was doing a pre-qualification, and they were renting in Dallas, in a certain area of Dallas, and they've been renting for 8 years, and they pay almost $46,000 a year in rent. And it's, doesn't, that, I get it, but they didn't expect, and they absolutely didn't expect to be doing that. It was going to be just a temporary 1-2 year span. And then all of a sudden they look up and it's 8 years. My parents rented my childhood home in Arlington, Texas for 19 years. They didn't expect to do that for 19 years. It just sort of happened. You wake up, just your kids. Landry is 12 years old. Karita remembers when she was a baby, and I was working in a mortgage office not far from the office I'm in right now. And I was on Lakeside Parkway, and she was a baby, and I was at my wit's end, and I needed to finish a loan up for her. And she said, well, I need you to finish this loan, and I'm going to come by your office, and me and Charles are going to take Landry off your hands for the day with, do you remember that, Karita? Yeah. And you're muted, but you and Caroline, you took, Caroline was little, And so, and off they went in the minivan with my baby. They left, and I had to go on about my business to do a loan. And she saved me. And then I finished that loan that day and then fell asleep on my desk. So there was the story. But they went to McDonald's and Landry loved it. She was fine. So let's talk about your FICO credit score and how that comes about. And this is very important because the FICO credit score is crucial to the decision-making process of the loan. You know, when you are we get a lot of people that will say, well, I don't, you know, I just paid one thing late, you know, like I think Philip could probably speak to this as good as anyone, because a lot of times people will come to him and they'll be like, well, it's not my credit's not too bad. You know, I just paid one thing late, you know, and we've had people that have ended up paying things late and they don't realize that you pay one thing late and all of a sudden can drop your credit score by like 70 points, right? And so 35% is your payment history. So you want to pay things on time. 30% is amount that you owe. So you don't want to max out every single credit card that you have. The length of the credit history is equally important. You want the length of the credit history to continue on. So a lot of times when you're an authorized user on like your parents' account, that's giving you history that you didn't earn on your own. And so the length of the credit history is also important. New credit, any type of new credit, that's 10%. And then the type of credit in use. I think Ben can speak to this a little bit about the type of credit in use and the kind of variation on that.
Well, you need, you know, like, especially if you have kids, I call them kids that come to you, and they have nothing, right? They didn't have anything. So, one installment and two revolving. And I've got somebody pre-qualified right now. It took us about less than 90 days to get them a 700 and something score. And they got their parents to help them with, I think, one of those accounts, but it's not too hard to get a good credit score. You know, but you do need three pieces of credit to kind of optimize it and get it going. But so it's, you know, I have a son who I put on a car loan when I bought him a truck his senior year in high school. And that's what got him started. And without that, you know, he'd had a rough time getting credit. But once he got a pay history on a truck, you know, it was pretty easy for him to get a credit card and move on from there.
What did you say when the call was starting? You were talking about your kid in college. It's like a slow start. No.
I told him, I told him
know.
as long as he went to college, I'd pay for everything. And he was a COVID grad, and he ended up, you know, he did fine at North Texas for a semester, but ended up joining the Navy because he was tired of taking classes from his dorm room. And when he got out, I said, "You going back to school?" He said no, and I handed him his truck note and his insurance, and I didn't think he could, you know, get it refinanced into his name, and he went down to Navy Federal and they did it for him. So, you know, that credit history got him going.
I was asking Philip, tell me what you were saying about Ashby when we started the call.
Well, actually, I was trailing off something Ben said. I'm trying to remember now exactly what he said. Something about how his credit, I don't remember now, even know what you said, Ben. But I was talking about how I think I was kind of following up what you did with your son. You know, Ashby's not taking care of business with school. So yeah, I mean these kids got to take care of business and do their grades. But you know, to tie in with this, yeah, I mean, it all parallels. You got to be responsible. Yes, got to be responsible and take care of things. But, you know, but then again, we've got some resources to help with low credit situations as well. Isn't that right, Stacy?
Right. There we do. Ranging in credit score. Now, I think Phillips had some 350s, but not me. But you can range in credit score. So
how can it get that bad?
I don't know. You have to work really, really hard to have that bad a score. So, yeah. So excellent. 720 and above is excellent. And then 680 to 720 is great. And then good, fair, and then 580 and below, it needs work. Now, if you have a 500 credit score on an FHA and you're going to put 10% down, we can do a loan. We've qualified people as low as that, with like I said, they got to have 10% down. I just can't believe you have birds. This is great. I love the birds, Martha. Love the birds. Anyway,
I know,
so
they
that,
just flew in.
oh yeah, it's all good. Back to what I was saying earlier. So we like to have a window into the soul when we're looking at a loan application initially. So that's why we do a soft credit pull, low stress, easy credit review, kind of gives us an idea. Then the other thing that we do after that is we send the opt-out notice. And the opt-out, once you do the opt-out, you can do the opt-out for 5 years. And then once we do that opt-out, then within 5 days, we can do a full credit pull, and especially if we know we're going to go to underwriting. But if we've done the soft credit pull, and in the soft credit pull, we can tell you're not ready yet, and we gotta put a plan together. Maybe we need to give you some rescore guidance. Maybe, you know, there's a lot of different things that we can do, you know, when we do a soft credit pull to prepare you for what needs to be prepared for the next step in purchasing a home. But we do that. And then also on credit scores, this just kind of gives you an idea. We also use what is called a what if simulator. And what if simulator is what we use when we're maybe trying to give you some guidance on how to improve your credit score. Now, sometimes it may be as simple as somebody has a 703 credit score, and if they have a 720 or a 740, then their mortgage insurance premium, if they're not putting down 20%, can be improved. Their interest rate can be improved. So it may not necessarily be because they have low credit. We're running a what if simulator. We might just be able to try to figure out how to provide the best possible service and the best possible rate. And if it is going to have mortgage insurance premium, how do we provide the best possible rate on mortgage insurance premium as well? That's why we use that. And then just gives you the same scale that I give before. But this is an example of, you know, somebody that had a current credit score of 582 and how we were able to help them get it to 633, which in some cases we need if they need down payment assistance. If you've got someone that's going to need down payment assistance, we need a 620 credit score or better. We're gonna pull all 3 scores, the high and the low, and we're gonna go with the middle score. And the middle score, if you have 2 borrowers, the middle score, and it's the lowest middle of the 2, but at least the lowest score of the 2 borrowers has to be at least 620. Do you know your credit score? We tell people to check it annually, the ftc.gov or annualcreditreport.com. We actually tell people to check it every 6 months, you know, just to take a look at it and to make sure there's nothing erroneous on the report.
I would recommend checking it more frequently than that.
More frequently than 6 months?
Yeah, there's been a lot of breaches lately, and one with the Social Security office. So there's a lot of fraudulent stuff going on right now, and checking credit scores needs to be a priority for everybody. I have mine set up to automatically alert me if my Social Security number shows up anywhere on a credit line.
What were you going to say, Philip?
I was going to tack on to that from when we did our updated license training the other day. Such a widespread fraud. It goes up every year, more and more and more fraud. And we're more and more exposed. Our Social Security numbers are more and more exposed. We have to protect them. They need to be doing some credit freezes as well on their credit. Not just checking their reports, but also freezing their credit.
Yeah, even the opt-outs that we offer when we are providing that to people, even on the opt-out, when you're opt-out for 5 years, that means nobody can, the bureaus can't sell your information, and they can't send you, you know, how you get, you know, you're pre-qualified for this card or that card, you know, but that's also beneficial. We talk about what makes up your mortgage payment: principal, interest, taxes, and insurance. And then it would also be mortgage insurance premium if that's necessary. You know, the principal is related to the actual principal of the loan. The interest is what's charged that used by the borrowed money based on the property value in the county that you're in and the school area, school zone. Those are property taxes. And then insurance, homeowner's insurance, and then mortgage insurance premium. Again, if you don't have 20% down, then you'll have mortgage insurance premium. We talked about where does the money come from when you purchase a home. I talk about this all the time. The money can come from checking and savings. It can come from gift funds. There, you can actually do a 401k loan without penalty, and it's called a hardship loan, or if you're doing a home purchase, you can do that. A lot of people don't realize that. Cash value of life insurance. Sometimes people will have a life insurance policy that they maybe got or their parents got for them when they were very little, and it's not maturing. It doesn't have any more value. And so some people have cashed a life insurance policy in to be able to purchase a home. The sale of personal property. You know, I've got a customer that's got an extra car, you know, like it's, you know, just an extra used car. He can sell that. We can have a bill of sale. Employer assistance programs. A lot of times people don't realize that, you know, you might want to look in the handbook if you work for, you know, a larger employer, that they may have something in there to assist with closing costs. You know, we're getting into, you know, when we get into the first of the year, there's, you know, tax refunds when you file your taxes. I haven't experienced one, but there are some that do exist. And the tax refund, you know, you can use that for a down payment. This time of year, a second job, we can't use the second job as a source of income, but we can, you know, you can create an extra account, and the second job, you know, can be well, I call it wham, walking around money. But in this case, you can use that second job money to use towards a down payment. Mortgage credit certificates have been around for like 30 years. I teach a realtor class called Overcoming the Down Payment Hurdle, and I'm teaching that class on October 22nd here in Flower Mound. I think create a register for that class. And in that class, I spent a lot of time talking about mortgage credit certificates. They're crucial. They're very, very important. And it's not a source of down payment, but it is a big tax credit, and we can use it to soar. I'm using it on a loan right now where I'm providing the customer with that additional income, which is great because he does have the tax liability to support it. So it's giving me an extra $300 in income on that loan. And then down payment assistance programs. We like all of the programs, and we just have a new one we're being able to use called Chenoa. We're excited about that. But I serve on the advisory council in Austin, Texas for the Texas State Affordable Housing Corporation. So I love that program because it's very simple and straightforward. Again, 620 credit score. And as long as your income doesn't exceed the limit for the county that you're purchasing in, then you qualify. You don't have to have a certain profession, a certain county, any county in the state of Texas, and then you qualify. The balance, every county is a little bit different, but the balance of the state is 114.5. So that's the lowest for any county. So I always start out the conversations by asking the question, do you make more or less than $100,000 a year? We like VA loans. Ben is a product of a VA loan. Both of his parents served in the Navy. Philip's son was in the not National Guard, state, not National Guard.
Army
Yes.
National Guard.
Army National Guard. And Philip, his son Zachary was in the Navy Reserve, still in the Navy Reserve. He may be being shipped to Italy very soon. Not
Nice.
sure about that. Yeah, and then we'll have to visit Italy because we'll have to visit him. Of course, you know, there's that. But VA loans are great. 100% financing, no mortgage insurance premium, no cash reserve requirement. You know, reduced costs for disabled veterans, which means they don't have a funding fee, available for purchase, refinance, high balance loans. And the sellers, you know, I know it says seller pays required repairs, but essentially what it's saying is that, you know, the seller does have to have a livable and safe provided property for the veteran. And so we protect the veteran to make sure that that's what they're purchasing. They're purchasing a livable and safe property. And if the seller has to make some repairs to make it that way, then that's what we're, you know, intended to do. But of all the loans that we do, a VA loan is our absolute honor to do and one of our favorites because it's, like I said, 100% financing, no mortgage insurance premium. And Karita and I have done a couple of veteran loans where they didn't realize, where I had to ask them, like, you served, why aren't you using your VA home loan benefits? Why to get it? You know, oh, that's too hard. That's too difficult. Well, we get the certificate of eligibility for you. We figure out your entitlement. So it's not hard. That's what we're here to do. And we enjoy doing it. USDA is more rural areas. That's becoming less and less the case in Texas. But rural areas like Philip, what area, not Lubkin anymore, but what area near you is considered rural, USDA?
Actually, anything outside of the city of Lufkin for us
Okay.
is and parts of that city of Nacogdoches. So it is fairly still widespread availability here. My biggest challenge is I just can't get the DTI ratios to work on this. So it is harder on the underwriting requirements for this loan product, but if you can make it work, it's a great product.
And they just came out with some new guidelines too. Patty Vance sent some, so you might check it out, where they
Okay.
became a little more liberal with the debt to income ratio, probably because people weren't using it as much. But the same thing, 100% financing. It has to be an improved area. I think another USDA area that's still eligible is Sherman. So the near us, it used to be where Weatherford used to be USDA, and now Weatherford's not. But there are some areas around there that are. So we just have to look it up. We got to look up the address and just make sure it's eligible. And again, FHA loans, FHA is such a great loan product for someone that's starting out, that has they have a decent score, but it's thin. You can put down as little as 3.5%. Purchase, refinance, renovation options. I'm working on a FHA 203K today with Lillian is the realtor on that, and the purchase price is $215, and they've already done the due diligence of trying to figure out what the repairs are going to be. And we're able, let me say this real quick while Karita and Martha too, while you're on here. If somebody has a loan with another lender, and let's say it's an FHA and it didn't appraise, we have a pathway for that to solve that. Because, some lenders are not, they just give up. Or realtors, man, they just give up. It didn't appraise, so we're not going to do the deal, and we just give up. And there is a way of looking at that to try to get that over the finish line. And it really, takes a good loan officer to kind of see how to make the variances work. But that is a loan that could potentially be done. It's just using FHA financing, but maybe looking at it as a 203K instead of a 203B. Less restrictive, gift funds are allowed, 6% seller concessions, which is what we'll have on that one that we're working on. Conventional. So I say this all the time, but I always say, what is the minimum down payment for conventional loans? And I'm amazed when a lot of people say 20% down, and you can do a conventional loan with 3% down. And we say it all the time, but it's education. That's why we do these classes, because it's education, because people sit and they think, oh, they've got a parent or they've got someone that's nearby that said, no, if you're doing a conventional loan, you need 20% down. You don't need 20% down. You can do a conventional loan with as little as 3% down. And again, we use conventional financing for a lot of things: purchase of a brand new home, purchase of doing refinance, doing renovation. We do a Fannie Mae home style. You can use conventional financing for a primary, a second home, an investment property. And you can put down less than 20%, but if you put down 20%, then you don't have to worry about mortgage insurance premium, or once you've reached 20% in equity, then you can cancel the mortgage insurance premium. Again, I keep talking about renovation is because I'm in the middle of one. We do all kinds of renovation, and these days in this market, there's a lot of properties out there that need a little lipstick, and being able to have a company that will be able to do these and able to kind of update electrical or plumbing. And the way we might structure it just depends on the condition and qualification of the borrower, and maybe even what it is that has to be repaired. Philip had a property and it was an escrow holdback. It had some repairs, but it was no big deal. And we did an escrow holdback of like $6,000 or something like that. So we've had a couple of situations where we do that, and then that way we can do the repairs after we close. Karita.
Would foundation repair fall under this?
I'm doing one where it's an FHA 203K. And we have all the documentation of the foundation and what it's going to be in the engineering report. And we can close on the loan, and then the repairs can be done after closing. So the seller is not inconvenienced with the 28 piers that property is going to need in order to make it a workable loan. Now, what I do say about those loans is we don't want to try to do all that loan, because you do have to have a HUD counselor that a HUD approved, and we call them a counselor, a HUD approved inspector that goes out and makes sure that all of the documentation of what the work that we're going to do is what we're going to do, so that they can create the checklist so the appraiser can appraise the property of what it's going to be when that work is done. But the biggest thing is a lot of times sellers don't want to do those repairs prior to closing. So in that example, we can do the foundation work. We just have to have certain reports. It's possible. Yeah. And then, sometimes you can do all in there. Martha, you got a question?
I do. I have a couple of questions. I'm familiar with the 203K. I'm not familiar with the home style or the purchase plus. And can you also speak to what you're running into with the age of the roofs now and the problems with insurance and how that ties in?
Good times, right? The roof situation comes back to like livable and safe, right? I mean, there's an old roof and it's fine. Ben can kind of speak to that. He's got a property in League City and the roof is old. He had some people check it out after Hurricane Beryl. And, it may not be the most attractive age roof, but it's not leaking, it wasn't, it didn't need to be replaced. Right. So, but then we have other situations where I'm doing a loan, for a property in Flower Mound. They asked for, them to get an adjuster to kind of take a look at it. Well, guess what? It needs to be replaced. So the seller's insurance is covering it. Well, guess what? Now the home buyer that's buying it, the insurance is better. So if it's a brand new roof, the insurance is going to be improved.
Say something, Stacy.
Yes,
I want
please.
to trail with what Martha was asking. I want to dive into that just a little bit deeper. I'm running into that, Martha, quite often where the insurance provider is getting very detailed on wanting to know more about the age of the roof, and they're just basically saying, no, we don't want to insure it if it's an aged
That's
roof.
what I'm
Even
talking
though
about. And
it may not
want
leak. Yeah.
and they want documentation and they might say, well, we know it's this age because when we bought it, but we didn't get all that paperwork and you can't prove it. So now they don't do replacement costs. They won't insure it. It's like some will do it at 5 years and 10 years. Pretty wild.
Replacement costs. Yeah.
Yeah.
It is a frustration because insurance companies are getting more and more picky about what they want to insure, and the premiums keep going up. So it's unfortunate, but that's the world we're in right now on those insurance quotes. So I just encourage them to get multiple quotes, and try to find the best fit.
I've had several insurance agents talk at meetings I've been to, and they're all saying that most of the companies are, if the roof is 10 years or older, regardless of the condition, they're just flat out not insuring it. And therefore it throws the loan totally out the window for the buyer. One of the workarounds is don't wait to the last minute to look for an insurance for your house. Do it during the option period. That way, if you find out
we won't push the file to processing or underwriting without a quote. Like you have to make a decision. Like we're not doing it.
Well, if you do it during option period and you find out the roof is 10 plus years old and you can't find an insurance company, the buyer is able to get out with minimal costs. If you wait until you're past that and you're into getting close to closing, then it gets more difficult for the buyer to get out with little or no hit to their budget. But yeah, it's becoming a real issue in Texas. And from what I'm hearing, it's been an issue in Florida for years, and it's going to get worse after Milton gets through.
And even more the reason why we need to know this loan product and why we need to use this in situations where nothing else works for that roof.
Yeah, if it's 15 years old, on the coast, you have to go with TWIA. Now, TWIA will take anything as long as it's, even if it's 16, 17. I've got, my roof's name is Ike because that's when it was put on after Hurricane Ike. And after Beryl, I had somebody, and if you have damage, get a roofer to go up there and check it out before you call the insurance company. Because even if they don't pay, they hit you for a claim, and there's a record of it. But it's getting, and we've had a few situations where we had to, agents that I had to leave them because they do a good job for me for a long time because they were blowing up a loan, making the debt ratio to, where the loan wouldn't work. So, and in that case, Karita, you can deny the loan if they're still in their third-party financing. You could get your earnest money back that way. But but it's just sad because they have, we have higher rates. property values up with taxes, and then throw in insurance and affordability, especially for first-time home buyers, is, you know, it seems to be getting better lately because rates have been coming down a little bit, you know, but it's still the triple whammy, and insurance is a big part of that. I think
Yeah.
even more so than interest rates.
Right, absolutely. And let me just say one thing about interest rates and about that class too, the overcoming down payment hurdle. Like, interest rates are what they are. So I'm so tired of talking about interest rate. You know, but it doesn't solve, if you don't have any money, it doesn't matter if the interest rate is 4%, 8%, 10%. It doesn't matter if you don't have any money. So we sometimes have to get together to get a game plan together so that you can purchase regardless of what the interest rate is. And you can't time the interest rate or the market. It's just never going to be the best, absolute best time. To Martha, to your question, Philip, was that the one that you did the escrow holdback? It wasn't a home style, was it, Fannie Mae?
Oh, it was an FHA loan, but I mean, I think the escrow holdback would have been the same either way, regardless of the loan type. We had to get a contractor bid. It was some damage around a window. I don't remember all the details on
Yeah.
it. It was fairly extensive on getting these repairs done. It was like over $6,000 in repairs, but it's like the seller knew those repairs were needed, but didn't even really have the money to even do it. So the
Right.
house had some deferred maintenance. And then furthermore, the seller was buying another house and they were all trying to do the transactions on the same day. The sale of this one and then buying this other one. So
No stress there.
time was very important on this, and it would not have worked had we not done an escrow holdback. So what we did is we had a contractor bid. We had to hold back 150% of those funds and out of that seller's proceeds. And then we held on those funds, got the work done, and then we released the funds. And then the seller got that difference money back that the contractor above the contractor bid. But it was a little bit of a process, but it worked out pretty good. Everybody got closed. Everybody was happy, so I'd do
Ben,
it again.
was
Yeah.
Stacy Jones a Fannie Mae homestyle? I was trying to remember.
No, his roof got blown off at Jamaica Beach during Beryl. So that was
Okay.
the one that
Okay.
took me 90 days to close.
Okay.
His insurance was way better when he closed because he had a new roof.
Martha's laughing. So what I'll do, Martha, is that when offline we can have a conversation. Purchase plus is when you want to purchase, you have a purchase price, but you want to add something, and you want it to be appraised for what that property would be if it had a pool, or if it had an upgraded kitchen. So it's the purchase plus what that would be. And then what we are trying to do is we want the appraiser to tell us what the value of the property is with that completion. So it really technically is a subject to, but it gives us the value, so that's what a purchase plus is. I've done a couple of them in my time. Some of them are straightforward and very simple, and sometimes people complicate them. And they complicate them because they think you can just keep adding. I kind of liken it to when, let's say you're going into surgery and you've got, what they're going to work on. And then all of a sudden, right before you go into surgery, you're like, well, while you're in there, can you do this, this, and this? No. They don't have enough. They don't have time because that's not what they said. And it's similar, like when people do brand new builds, and Ben and I and Philip cringe every time people go to the design center. He had a good friend named Kayla, and he's like, Kayla, when you go to the design center, say no.
The base price was $605 and the final product was like $765, and I and it's great, we get paid off a loan amount, but it got closer and closer and closer to not being a loan.
So I love those programs, but there are parameters to them. And sometimes people want to push the envelope of the parameters. I can't believe you would think that anyone would ever do that, but that does happen. Do's and don'ts of home buying. And we're in the home stretch here, and I want to kind of finish on time. I highlighted some pretty important things. Ask questions. Let us know if you have employment changes. We've had people change employments in the middle of a loan, and we can't understand why they do that, why they go out of the country when you're in the middle of the loan. Not that you can't travel, but I have a loan that's closing on Friday, and the gentleman that's closing, he's like, well, my wife doesn't need to come. And she's not on the loan, but he's from New York and he doesn't realize he's buying here, a primary here. And it's a community property state. So yes, his spouse has to come, and he kept asking why, like multiple times, like why, then I started getting nervous, like, because she has to sign the deed, it's community property state. So marital status, don't change jobs. We talked about that. No, we don't make major purchases. Karita just loves it when they go and buy a bunch of furniture in advance. And deposit undocumented funds. We have a loan that Ben's working on right now, and there's all these large deposits, and we have to source that.
All cash.
He's coming up, and it's cash. Yeah, cash. All these large cash deposits. The latest on one of them of the large deposit is fertilizer. I don't know. Like, yeah,
You don't even want to know, Philip.
Philip, you don't even want to know. This is a Philip Price load all day long. So it's crazy. So, you can't get a credit card advance for your down payment because that creates debt. So you can't do that, or open loan lines of credit. And then you don't want to change your closing date just at the last minute, just arbitrarily change your closing date. You don't know if that impacts the lock or the type of loan that you have. We always talk about the documents that we need. 30-day pay stubs. This says bank statements for the last 3 months. Typically it's only 2. We use an account check program that if we can link that, then we don't have to get paper documents. And that's what we prefer if we can. Last 2 years, W-2s, tax returns, current P&L statement. If you're self-employed, we need that. And we definitely need 2 years tax returns when you're self-employed. Any kind of dividend earning, employer information, a photo ID, resident history for 2 years. We don't always need a social security card, but every once in a while we got to match some stuff up. So we will ask for it. And then understanding cash funds to close. Same thing. I've got this closing. The guy's closing from New York. He has a TD bank account in New York where there are no branches here. And that bank will only do a cashier's check or wire transfer if he's physically in the branch. So then he was going to fly to Florida, and I don't know if y'all have heard the news, but there's another hurricane. And I was like, nope, you're not flying to Florida, So, thankfully we had a clear to close 10 or 11 days in advance. So we were he could open up an account, a new account here, write himself a check, because the TD bank account has checks, write himself a check for cash to himself so that he has the cash to close for the funds to bring to closing on Friday, wire or cashier's check. Non-liquid funds allowed if exercised. Gift funds permitted with most loan programs. We like to create the gift letter and the path on how to do it. And then, this last screen, I just always talk about where people's story starts. This is that up in the left corner is the house that I grew up in Arlington, Texas. My parents rented that house for 19 years. And they didn't rent that house for 19 years because they couldn't make a payment. It's just time got away from them. And that house holds a lot of stories. That tree in the front yard holds a lot of stories. And this is a fairly more recent picture. When I was growing up there, it didn't exactly look like that. And you can't really see it, but to the left, there was a fence there and my bedroom was back there and there was another tree. And yep, I got caught sneaking out. That was bad. So that didn't, I don't remember anything after that because Dad found, that was not good. My life was not good after that. I was grounded forever. So, and then at the bottom is Ben with his dad, Don, who served in the Navy. I talked about that earlier, and that's Philip and his wife, and then his son. And then on the picture on the right, that's Zach and Ben and me and Landry. And Landry is 12 now and a lot taller. So, but in the middle picture is my grandfather, Don Shriver, who fought in World War II, and he came back and became a teacher. And that's where my story starts. He came back and he was a teacher in Waco, Texas. And my dad and my mom met in Waco. My mom was from Marlin. and my dad worked for the Piggly Wiggly in Waco, and my mom worked for the Rexall drugstore, and apparently the stock boy was pretty cute. And so, and then they met, and then the rest is history. So, you know, we got to help people. We got to help people figure out where their story is. We ask for people to be our friend. I always give these links because, you know, I'm on Instagram, Facebook, LinkedIn, YouTube. I record these calls and I put them on YouTube. So we can teach people things. Philip's on Instagram now too, and Facebook, right? Instagram, Facebook, Philip Price Mortgage, I think. Mine's Stacy Lynn Mortgage, and then Ben is too. So we tell people to be our friend. Like, we want to be friends with you. We want to compliantly share information that realtors have about listings. We're not afraid to do, you know, an open house or share something or look at our pre-qual list and match people up and all that kind of stuff. And then I just always say thank you, and we appreciate you joining. I'm in Flower Mound on Speaks, and then you know, Philip, like I said, we're in East Texas, and Ben right now is in the League City area, and I have a great deal. I have a lot of pocket of the business throughout Texas and a lot of different areas, in, you know, even in El Paso. So we just enjoy being here, and we, like I said, we definitely enjoy having the opportunity to do business in some other areas, and we have some great relationships with credit unions in the area. Like, there's a credit union in the area who doesn't do VA loans, and they don't do like second homes, or they don't do investment purchases and things like that are out of state. So I'm their girl, you know, like, so we create relationships like that. So if you have relationships with someone that maybe they don't do down payment assistance and you like them, you know, maybe we could be their partner, because they surely probably have a loan product that maybe we don't do. We do one-time closes. So people, Philip is very versed in that. Everybody in Lubbock, Texas likes him because he's done a one-time close in Lubbock, Texas. But so, you know, if we do those two, and there's products that we do really well because we have a really good support system with our corporate office and the managers in those areas that help us, you know, construct things. So anyway, I appreciate y'all coming on, and I appreciate the questions. And if there's some way that we can, and you know, any way to answer anything in the future, let us know. And I see, oh, thanks for attending. I'm going to put in the chat my email address. If y'all have questions, you can certainly reach out, and my cell phone. So if you have any questions and things like that. So y'all, we are taking November and December off on the Keys to Homeownership, and we will be back in January, new and improved. And I always look for the input. So Martha, if you get some input and you want to share it, I'd love to hear it.
Yeah, I'll definitely let you know. I think the game plan is to develop it, not this week, but next week, and then like be ready to go. And I know that the idea is to partner up with lenders in the webinar.
Great.
Yeah.
Well, we've been doing this for a long time, especially me and Philip and Ben, and Karita will nod her head. So our PowerPoint has evolved. We're trying to make it more about the process, and then dive deep, you know, with the topics after the fact. So, but yeah, I love this. I love being able to do it. It definitely needs to make sense, you know, and provide the information that people need. But if we're here to help.
Thank you for letting me join.
You're welcome. All right, y'all have a good night.